Tak boleh apa? Mesti ambil.
Kamu aja.
Apa? Ya dah.
Ya.
Biar mesti oke.
Oke, I'll check.
Mau aku coba lagi nggak?
Tapi di situ berarti aku harus stop dong.
Ah? Nggak usah bro. Nggak usah toggle. Nggak usah toggle. Nggak, jadi A sama B untuk itu aku tahu.
Coba klik.
Oke. Oke. Aku coba sekarang ya.
Oke.
Iya, itu problemnya bro.
Sama.
Nggak boleh sama memang.
Pantas dia interviewing each other ya.
Iya.
Oke, good. Yes, at the same time.
Same time,
Yeah.
do a solution. If you do webinar, rate must go on the computer, not rate user screen. Because we don't see anything.
Oh, because our webinar will show the presentation
I know.
and the rate.
Correct. But when you're talking on the screen, we don't see anything. Because the screen.
Bro, I will switch off this one. Sorry, I will switch off. Sorry, yes, I will switch off this. Yeah. I take out first, yeah. Oh, this one, yeah. Okay. It's in my info.
Okay, we can.
Sorry.
Yeah, thank you. We make some changes actually. So I think this time around
I'll change it.
you will see.
I hope.
Yeah.
Because the last one, the interview, half time we're guessing.
All right. Let me share screen ya. Kamu perlu aku punya ini nggak? Aku punya ini nggak? Ini, aku punya ini. Perlu ini nggak? Kamu kan ngomong. Mau hitung ya perlu nggak ya?
Ya, betul.
Okay. It's already. All right, a very good morning, everyone. Welcome to our TriX seminar. Thank you for spending this Saturday morning with us. You are in for a very interesting topic today, and we're going to share with you the biggest problem in the stock trading industry and how our solutions can actually help you with that. So before we start, allow me to introduce our company. So who we are, who is Algo Merchant? So basically we are a diverse team of traders, engineers, and data scientists that band together and we carry a mission. What is our mission? Our mission is to actually revolutionize the way people invest. So we are featured in many of the media. So you can see the FinTech, SGX, IDX, Business Times, Yahoo, from NTU as well, and many other media. So we started our journey in 2015. So we started our solution developing a social trading platform, and we created many innovations after that. So as you can see on your screen, right, so on the most left, you can see that, okay, we have our charting platform as well, and then we have a social trading platform where traders can actually share about their trading journey. Yeah, and then we move on to start creating algo oracle, basically solutions that help traders to predict the market. So it's a smart solutions. But then we realized as we develop these solutions that this is not enough, because many traders, even though they are helped by all these tools, they are still mainly influenced by their own emotions when they trade. So maybe, can I have a show of hands? How many of you have ever experienced trading, looking at price dropping 20% within a day, and you start to panic? Raise your hand. Yeah, okay, good. I see a lot of hands raising up. That's exactly the point. Why? Because our emotions affect the way we trade. Then we realize, okay, so if that's the case, we can develop something better. So in 2017, we start developing our robots. So this robot is different from the robots that you will see in the market. Okay, so in the market, you will see a lot of, trading robots, FX robot, and any kind of robots. But what is the difference? Our robot utilizes AI, artificial intelligence. I know AI is a word of hype, right? So a lot of people, a lot of solutions uses AI, but what does it mean? So later in this seminar, stay tuned. We will share with you what do we mean by AI and how are we different with other solutions in the market. So on your screen, you will be able to see a few of our robots, like our Trident X, Tri-X, and our Fiki. In terms of company, now we are actually focusing our solutions to two fronts. At one front, we are serving retail traders like you and me. At the other front, we are actually serving institutions. We provide our AI as a white label to the institutions where they can use in managing their funds. Okay. So you guys must be thinking, okay, so what you are in for today? So this is the menu of today, right? This is what we are going to discuss. The first, how AI works. So basically, how is AI different from any other robot, any automation tools, or any trading tools? And you will get to learn about applying AI in stock trading. How do we use AI technology and apply it into stock trading and help our customer? And we will share a peek into our robo factory. So this is the interesting part. So you will get to learn how we actually develop our robots, right? So this is this is some things that people are looking forward to. And then we will introduce Trident. So you notice that this is Trident, not Tri-X yet, because Tri-X is actually a further development of Trident. So you can say that it's like a sister robot of Trident. And we will share with you why Trident is so unique, why Trident is so special, and then how we develop Tri-X to make it even better, right? And we will share with you tips and tricks how you can boost your strategy performance. And then we will introduce Tri-X. And lastly, but not least, we will also share with you how you can manage your wealth using our robot. So to grow your wealth, to manage your wealth, to preserve it with our solutions. The speakers of the day, let me introduce you to Rain Chua. He is the co-founder and head of trainer in Algo Merchant. He has 20 years of experience in cross-asset trading and portfolio management. And today, he is actively training many traders and investors with quantitative investing methodologies. And he is also managing private clientele's investment. So before we get rolling, before we start with this event, I would like to introduce Ma Wei Tong. He is the managing partner and head of institutional solutions in Algo Merchant. He has more than 40 years experience in the financial market and asset management. He was the CEO of Fraser Securities and president director of Lipos Ciptadana Asset Management. And in Algo Merchant, Wei Tong is in charge of delivering our solutions to various financial institutions. So without further ado, let us welcome Ma Wei Tong.
Oh, okay.
Yeah.
Okay. Yeah. So good morning, all of you. Good to see you. And also, I've been told that today we also have people who are attending online. So for those who are attending online, good morning, and thank you for attending this seminar. You know, last night, the Dow dropped 1,000 points. So you might think, oh, actually 1,000 points, is that a lot or not? So it's about 3% because the Dow is about 30-something thousand. So 3%, you think, actually, is that a lot or not? In the old days, when you have 3% drop in the market, everything stops. Go shop, go home, because there's too much emotion in the market. But of course, now they stop and then they take a break and then they resume again, okay, hoping that people will cool down. But why did it drop 1,000 points? Because the Federal Reserve Chairman, Jay Powell, said that inflation will be higher for longer. So interest rates going to have to go up more. So it means that with inflation, actually, your money become less valuable. So in a very, very simple way, we go to the, eat wonton mee, let's say, right? Or in the previously, or even 1 year ago, you pay $3.50, you get a nice wonton mee. Today, you have to pay more. So conclusion, cash is becoming less valuable. Cash is trash in the long term. So you have to invest your money, right? So that's why I'm glad that all of you are here today, because if you want to invest your money, you got to learn. Otherwise, you invest, you lose money, right? Then keeping cash is better because at least you don't lose money. So it's good that you come, and I'm pretty confident that you will learn something today about the newer techniques of doing investments. I mean, if you want, I can go to a long story over, the past 20, 30, 40 years, how investment landscape has changed. But I'm pretty excited about how AI, artificial intelligence, is used to make good decisions in the stock market. Because you in the stock market, it's about making good decisions, what to buy, when to sell, okay? So I'm glad that all of you are here and you are able to learn about AI. Also, at Algo Merchant, as you saw, since 2015, and particularly in the last 5 years, we have developed what we call these robots to be able to trade and invest. Now, I always believe that a team of people is always stronger than the individual. Okay, so you have this team of people, data scientists, market traders, etc., got together, put their ideas together, and develop a system, okay, to trade the market. So over the last 5 years, you can see the portfolio, how they are doing, what are their strengths and weaknesses. So today, when we talk to you about our robots, how they are doing, it is for real, with real money. It's not just on paper anymore. Okay, and I think this 5 years is also quite interesting because you had very good markets and then you had very volatile markets, right? Since actually last year. And in fact, for those who either have attended or might have friends who attended, the consistent message we have been saying since last year is that the market is going to be more volatile. The simple days of passive investing is over. It's more and more volatile, okay? And therefore, the question is whether it is better you do your own money management or you give it to a system. So my thinking is that it's better because you have this group of smart people. And the people in our team, they are Lee Kuan Yew scholar, they are, Mensa and all that. And with experience, develop the system. And because it is a system using AI and computer, is sustainable. Okay? A person trading, maybe after that, you get tired or whatever reason is not sustainable. This year he make money, next year he lose money. Okay, so I think there's value in a robot system. So I'm glad you're here. So please pay attention, and I hope you enjoy the seminar as well as learn something. Okay, and finally also, usually at the seminar, of course we have snacks and drinks and all that. So I hope you stay back and then chit-chat a little bit and bring your friends to the seminar, or at least discuss with your friends, so that you see investing as a journey, not just you come or just make money and then go home. Okay, so enjoy the session today. We've got very good and experienced speaker, Rain, and the others as well. Okay, so enjoy the seminar and talk to you again afterwards. All right, thank you.
Right. It's okay. All right. Good morning, everyone. Thank you for joining me in this Saturday morning. Okay, we know we have a plenty to sleep actually this morning, but you guys coming here because we believe that we would like to look for solutions that can help us to make money in the stock markets. And that's, I believe, the reason why we are here today, right? Now, here's the thing. How many of you have been trading more than 2 years at least in the market? Right. Now, let me ask to those who have been trading for more than 2 years, right? How's your experience trading in the market? Is it difficult? Is it easy? Easy. Okay lah.
It's not that. It's okay.
It's okay. All right. What about you?
Break the rules.
Break the rules. How does it define? It's difficult. It's hard.
Emotion.
Emotion. So if you can nail that emotion down, so probably that you perform better in the market, right? What about you?
Up and down.
Up and down, exactly. You know that actually your experience, right, is not the only one that experience that, all right? In fact, I would say majority of traders, right, retail investors in the market, kind of experiencing this kind of roller coaster, right? And especially what Mr. Ma has said, yesterday the market dropped, I think about 3% for the S&P 500. And I think majority of traders lose their money in the markets. Well, let's take a look at some facts here. You know, like when you do Google out about traders, right, you will discover that 95% of traders lose their money in the stock markets. Now, I have a very simple question, and everyone can answer. Anyone can answer this, right? You will get a $10 Starbucks card. Can you help me to interpret what this word means? 95% of traders lose their money in the markets. And anyone likes to try? You like to try, sir? Okay. How you define it? All right. Nice try. Yes, please. All right. 95% means, and when we step into the room, we look at our right, our left, all right? Chances, if those traders trade the money in the market, right, chances is losing the money, right? Make sense? And I will interpret it in another way, that as long that you use human logic, chances you will lose. Because 95% of traders lose human logic to trade the market. And this is the big drawdown why traders lose the money in the markets. And also that, you know, when people trading, like what you mentioned, is pretty much driven by the greed and the fear. And you know, when we talk about investment,
we are actually pretty much talking about how to manage your risk and manage your return. But in reality, if you talk around, many of them are just expecting rewards. So to them, investment is about how to make money only. Therefore, when you see this advertisement, this very inclined to a human, especially when you look at $1,000 a day, and the higher this number will attract you more. So that is, I would say, it's a bad advertisement, I would say, right? Therefore, now, let me ask you one question, right? When you talk about investment, what is your expected return? Let me ask you, sir, Jacob. You have been more than 2 years. What is the number that you think, oh, this number is fine for me? What's that number? Not say. Okay. What about you? What is your number? I mean, like, if I achieve this result, and I'm going to be happy.
10% or more.
10% or more. All right. Good. Check it out. All right. What about you? 20%. What about you? Can. Everything also can. What about you? As much as possible. It's very realistic. That is realistic, right? Now, when we would like to trade, right, the most important is actually we would like to set our expectation right. Because when you have your expectation wrong, no matter how good your trading is, you will never be satisfied, all right? And that's going to be the downfall as well for the traders. Now, let's set our expectation right here before we start to know or learn how to invest, right? Now, I just want to introduce you this as our benchmark, and anyone can make a guess who is this guy. Yeah, looks like Bernanke. Looks like a peacock as well, as long like this. Similar. All right, this guy is a William Eckert, right? By the way, he is one of the founders of the Turtle Traders. This is a legendary Turtle Traders, if you heard before. And the reason why this guy is so popular, because like these two founders, right, they find a technique, a strategy that can produce for $200 million in 10 years' time, back in 1970. And then this guy mentored 23 turtles, actually human traders. And apparently those traders, right, are so successful and make $175 million in 5 years' time. So this equivalent to 80% annualized returns. Now, here's my question. How many of you would like to entrust your money to this guy to be managed? Okay? Happy, yeah? You want, yeah? All right. Now, let's track him down. Where is he today and what he does, all right? Apparently, this guy has been successfully, he has his own hedge fund, all right, a popular one called Evolution Strategies. Now, here is the attention that I would like to draw for you. The CROR is about 10.85. Means that the annualized return is about 10%. Is it good enough? How many of you say it's good? How many of you say it's bad? It's good enough, yeah? What about you? Good? Good, yeah? Good, yeah? All right. Now, I just want to share with you one tips here. Now, take a look at the equity curve here. A lot of traders, right, how they evaluate a strategy, well, they don't really have a systematic way to evaluate a strategy. As long as sometimes they make money, sometimes they lose money, you know, without any directions. But the function of having this equity curve, you can evaluate whether how the performance of the strategy. Well, as long as the equity curve is positive gradient, there is no argue it's a money-making strategy. All right? Now, for those of you say it's bad, for example, or say it's good, I will not comment, but I just would like to draw your attention also here. Right, if you want your money to be managed by this guy, the minimum investment is $20 million. And take a look at the fee here. Management fee is 1%, which is, I think, about 20,000? Is it? Sorry? Oh, 200,000, yeah, 200,000. What does it tell us? The market value to get 10% in 1 year is going to be 200,000, excluding performance fee. So that is the market value today. All right? Now, we believe that a lot of retail investors, they would like to be, well, Warren Buffett, right? How many of you would like to be Warren Buffett? No, yeah. Not good enough, right? I don't think he's good enough, by the way. Just kidding. Right. Now, for Warren Buffett, right, his performance in the last 15 years is actually just 9.4%. Now, what about average hedge funds? Well, I would say it is just about 6 to 5%. That's going to be the average of the hedge funds. Those are the professionals, right? And the reason why it is hard to be like back in 1970s, making about 80, 70% kind of returns, well, that's because market today is very complex. The market today that we are into has a lot of noises. And according to this guy, Ray Dalio, who manages about $160 billion, this is a Bridgewater fund. According to him, that market is unpredictable. That simply means market is 50-50. As a human, we do not have the edge to predict the markets. That's simply what he says. But here's going to be the questions. If the market is 50-50, right? Why so many retail investors, like 95%, lose their money in the markets? You see, this is what contradicts the so-called unpredictable, right? Market 50-50. So if just I close eyes, I just do a random trades, probably should be 50-50. Instead of 95% winning and 5% or 1%, I mean like 95% losing and only 1% perhaps they win consistently in the markets. Now, the only reasons, right, will be fall into these three categories, right? As long human is involved, all right, there's an emotions, there's a bias methodology, and human love to set wrong expectations. And these are the three things causes human failure in trading the markets. Now, when you do more in-depth research, this probably the articles that you discover that monkey makes better trades than the average fund managers, right? So this tells us one thing more, actually, This tells us that, well, trading or being successful in investing or trading, right, has nothing to do with how smart you are, how knowledgeable you are, or how resourceful you are. Has nothing to do with that. And this tells you just simply because when you are a human, you tend to lose in the markets, or simply because human is irrational. Now, do you know how difficult to be rational? Now, let me ask you these questions, right? If you want to entrust your money, right, do you want to do it? You entrust to a portfolio manager or to a monkey? Let's try. You see how difficult to be rational, right? Research tells you monkey is better, but we still choose human. So,
The research is flawed.
it's flawed, right? I think so. That's the reason why, okay, we compromise. We compromise your options to have portfolio managers, but we have take this information, right? Therefore, we try to move away from human, all right? And smarter than both human and monkey, and therefore we start to adopt artificial intelligence. All right? And for your information, that traders start adopting, or hedge funds start to adopt computer algorithm to manage their investment. And some of them actually they have been moving towards the AI, artificial intelligence, to manage their fund. So this kind of technology is not really new in the market, but this has been used only by the quant fund, the big funds, to manage their high net worth individuals, right? Therefore, a lot of people say, hey, Rain, the world is not fair. look at this iceberg. The tip of iceberg, those are private individuals, right? The money has been managed by those top-notch quant fund like Man, Hedge, L2, Sigma, Volion. Then this is Eckhart Trading. Now, here's going to be the questions for you. And if you can answer these questions, I do have a Starbucks card for you, all right? Who is going to help face the bottom of the iceberg? Who's, like the world is not fair, right? Anyone think the world is fair? No, right? So this type of iceberg, those private individuals, the money has been managed by these top-notch quant fund, by Two Sigma, Renaissance Technology, Volion. But what about those at the bottom of the iceberg here? Who are going to help them with their money? Precisely, yes. Well, you're very smart, all right? Yes. So this is the portion that we are trying to solve this equation or issues in the markets. So we do exist because we would like to bring top-tier algo trading hedge funds performance to mass markets, all right? So our ambition is actually to level the playing field between those institutions and retail investors, all right? So this is how we help retail investors and institutional, like hedge funds, for example, all right? Develop an AI. Now, a lot of people kind of asking, what is AI? Now, let me give you a brief description about the AI. We develop a brain, right? So this brain has the capacity to think, to analyze, to process information, to communicate with the market without any interference, influences, biases from human. And this kind of technology has the ability to crunch tons of data just like within a split of hours or seconds, and it can capture and learn years of knowledge and experience that no human can never achieve that, right? In order for us to understand better, let me give you a sneak peek about what we did behind the scene. All right, how we create this artificial intelligence. And this is going to be very important because, out there in the market, many of them, they claim the solution is AI. To be an AI, there is a specific definition or the process that we must do to be categorized under the AI, right? Now, there are 4 steps that we did. The first step is that the learning phase, the learning process. Now, this AI, when it started with zero knowledge, zero experience, all right? So as the developers are called, our job is just to feed the data, all right? To ensure that this machine is learning and getting smarter. That is our objective. And when it's learning the data, all right, to be more specific, we call it like classification, all right? So it's trying to give the in-sample data for the robot to learn and to find those patterns. When we define a pattern, right, those that is a patterns that hold certain statistical significance, so we can ensure that it has a predictive value, right? Now, a lot of robot solution out there there is no learning process. They're just automations, all right? Now, the second important process that we did is that we do validation. So this is like when we are in the schooling time, after we learn, we have to be validated, right? We go through a certain test. So validation phase is actually when we test out the robot. Okay, the reason why we like to test the robot, because we would like to ensure whatever that robot learns during with the in-sample data, all right, then we test out with unbiased data or what we call out-sample data. We just try to ensure that the behavior, all right, the trait behavior during the learning and the behavior of the outcome would be very similar. So this will create a consistency in the behavior itself. So we can ensure that our statistical value, it comes with high confidence. So that is the motive or the objective, what we do in the second phase here. Later on, once we have those, what we call the factors, all right, or the winning patterns, we combine them together and we create what we call a strategy, or we call it a trade models, all right? The focus is actually to understand the characteristic of these solutions, right? It has a good quality signal. So our evaluation is based on signal performance up to this stage. And the last phase is going to be the step 4, which is that we are going to so-called develop the robot. This is where we focus more on the money management. This is where we start to create a model portfolio with certain behavior, like what is your CAGR, what is your drawdown, what is the beta, alpha, volatility. This happens during the step 4. And then the robot is ready. As simple as that. All right? Now, so let's recap and summarize about these robo investing solutions in 50 seconds. Right. So that is robo investing solution. It's AI investing solutions. It's an alpha algorithmic trading for retail investors that we developed. And back in 2017, our solutions was featured in the mainstream media like Business Times, Yahoo News, Think in Asia, and they label us as the first robot traders for retail investors that has successfully find those inefficiencies and tap to profit from these market inefficiencies consistently. Right, so let me introduce you the first innovation, the most intelligent robot AI for the people, right? Trident, right? Now, before I explain about this Trident, right, I do have one exciting question for you, right? Can a long-only strategy profit in all market cycle? No?
Sometimes you need to shop.
Sometimes you need short. So how good it is, you can make money.
Whether it's long, whether it's bull or bear, if we are good enough, we are able to make money. It's only in a range market you are not able to do.
Right. So you think in the bear market, this long strategy, one time, die.
Because when you long, if the market is dropping, when you long, you definitely lost more money.
Right. Okay. We just keep at that for a while. All right. Now, anyone have the same ideas? Like, if you have a long-only strategy, how good your long strategy, you definitely lose the money in the market, in the bearish market, in the bearish mode. Or, as long that your long strategy smart, then you can profit from the markets. Right, okay. Maybe before I answer right or wrong, right, I just would like to ask you these questions, all right? How many of you has the ability to predict the markets? Or maybe, how many of you can predict the market 3 months from now? No. How many of you can predict the market 2 months from now? Hey, Noah. How many of you can predict 1 month from now? Still no. 1 week? Tomorrow? None. Okay, good. So apparently that we don't have predicting abilities here, yeah? All right. Now, I just want to share with you a certain fact data here, right? Now, this is we captured the bar of the S&P 500s. So if you take a daily time frame, right, the positive bar is 54%, negative is 46, quarterly go to 68%, and negative 32%, 1 year 74, 36, 86, 14, 94, 6, 100%, 0. Now, do you see what patterns here? Do you see the pattern that the longer your time frame, your positive increases as well? There's is high correlation between the time frame and your win rate. That is a pattern. All right. Now, assuming if I take this, you guys can interpret it, right? You know how to interpret the information, yeah? Okay. Now, if I take a quarterly, means that your long strategy, the probability is 68, then the short strategy probability is 32. All right. I just take this this data. All right. Now, let me ask you a question. To optimize your return, which option you want to select? All right. Now, we know that when you long, your probability to win is 68. When you short is 32, yeah? All right. And given that we cannot predict the market, so to optimize your return, should you choose A, I should combine long and short, or should I choose long only to optimize your return?
Yeah.
Okay, Starbucks. Yeah. A. Okay, yes, please. Okay. No, actually, that is a complimentary. The answer is wrong. By the way, I love your energy. I love you trying. All right. There's no mistake. There's no wrong, actually. All right. I apologize. All right. Now, assuming that you have a coin, all right, which you know for A and B, right? This is head and tail. All right. So you know that if you choose head, your chances of winning is 64, 68, and you choose tail is 32%. Now, if you want to optimize your winning, right? Am I right to say that will you choose head all the time, or you should choose head and tail if you want to optimize your winning? You got me so far, right? Choose only one. All right. And the reason for that, because long has the winning edge. Unless you can predict the market, that's going to be A. But given you cannot predict the market, it should be B.
How about hedge strategies? I mean, within the same industry, they long, they do, they short.
Right. Actually, I would say a little bit more complicated. We do hedge as well. Okay, this is aside from this on the screen here. We do have shorting, but the shorting to hedge, not to profit. Right, but I do not want to confuse that much. All right, so I would say that from this exercise, we know that when your edge is actually on long, unless we can predict, if not, that we would like to follow the winning edge. Make sense so far? Makes sense, yeah? All right. That's the reason why to optimize it, right? We would like to play with the volatility, right? Now, how is volatility looks like, all right? Something like this. Or if you are chartist, right, you can imagine volatility like this. Or if you don't like two of them, you can choose, this is how I draw volatility. You can use this volatility if you like, all right? So how to win and how to optimize your performance in the markets, right? Now, to take note that market is always, or most of the times, inefficient, all right? This is uptrend, sideways, downtrend. Can I do this, all right? During the uptrend, I just buy low, sell high. During the sideways, I buy low, sell high. During the downtrend, I buy low, sell high. Can I do that? So can I just long only strategy profiting from these three different market?
If you can catch the swing.
Precisely. That is where the magic or the AI that we are going to demonstrate later on. But as far as the concept goes, first, that as long that you have a good algorithm, you can catch these three opportunities, right? Now, this is the live trade made by the robot, the Trident. For example, like HCA, it's an uptrend, it buys low, sell high, all right? Sideways, it bought at a low price, and then it sold it at the higher price. Same thing when the market downtrending, it bought low and sold high. Now, when we apply this technique, by the way, this is a real trade made by the robot itself, yeah? So this is market, all right? This is how market looks like. And this is how inefficient market looks like, okay? There's no like straight market, all right? It's zigzagging, right? Now, our aim is to profit from this inefficiency in the markets. And that's what has been featured in the media, that we capture the inefficiencies. This is how we trade. We make use of the inefficiencies to profit. So when the market is up probably 10%, or the market is down by 10%, if you can capture those inefficiencies to profit from these inefficiencies, this is how your equity curve looks like, all right? The more opportunity comes, the higher equity curve. And this is what we call alpha. Means that the return is not because of the markets, but probably because of inefficiencies. You can do away from the markets. And this is also what we're going to prove today, that your portfolio, your equity curve, can be very different from the markets. All right? And this is the beauty if you use the pattern to trade. Well, I take example, this Bank of America. So it started bullish, then followed by being bearish, and finally crash. So it captured two opportunities here. It bought and sold high. It bought and sold high during the bullish and bearish. But during the crash times, then it skipped through this period of time, the crashing period. Well, that's because when the market crashed, right, there are a lot of irregularities in the data itself. So as the machine or the robot, they can't capture the patterns, right? So in this chaotic moment, if you use a pattern, it will organically skip through this crash period. You got me so far? All right. So as a result, you are safe from the market turbulence, right? And also the beauty if you use a pattern, right, is unlike human, which is easily panic, it can help you a way to manage the risk as well. So this is one of the real trades made by the trader itself. So apparently that it started to bought at a low price here, but apparently the outcome is slightly different. There's a noise kicks in, so it drops, all right, but it rebound back. So unlike human easily getting panic, for the robot, if you have followed my AI for stock trading, we mentioned that the way how robot interpret the data or make execution is by the expected value. It means what is the probability here to rebound, and if it rebounds, what is going to be your reward compared if it was make a wrong, it crashed further, and what's going to be your damage. So this is talking about the expected value, and at the point of time, right, it decided to hold more, and it rebounded back, and it sold off closest here. So that perfectly managing your risk very well over here. You see that? So apparently that you are exposed to this risk, but now with using the pattern that save you from exposed from the maximum risk. As a result, when we apply this algorithm, this is going to be the result or the performance of Trident, all right? The CAGR is 13.29. The winning ratio about 68%, all right? And this is the performance year-on-year basis. Right, 2018, it performed at 20%, where the market dropped at -7. 2019 performed 4%, where the market is 28. And 2020, when the market's performing 17 or 16, then Trident has been performing about 8%. By the way, I believe that you guys have received the handouts, right? And the handouts that you look at right now is actually the live portfolio made by Trident. So we captured and we printed from the interactive brokers, and you guys can take a look. But right now, I want to ask you guys, before we go for a short break, right, I just want to ask you one question. Look at the year 2020, right, where the return is 8%, the market is about 17%. How many of you think that Trident underperformed than the market? Or I would say that, maybe a simple question. Which one do you think better, the market or Trident? Just by looking at year 2020. The market, yeah? Market is better, yeah? Market better. Okay? Anyone agrees? Right. We go for the short break, okay? And shortly, I will convince you to look at the things very different, okay? Right, so just take note, another one winning rate for 68%. And I will go through in more detail for this number, all right? So, all right, guys, we just have a short break for 10 minutes, and then we come back here, right? Thank you, guys.
Don't worry, you still owe me a lot. Don't worry, I paid $12
All right. There is one thing that I would like to show you about the accuracy on how these robot solutions identify the timing, the entry and the exit. Like what you mentioned, it is going to be good if you can just take the opportunity, make the entry at the bottom, sell it high, right? Now let me show it to you. Right. Now, right now, if you look at this, there are 1, 2, 3, 4. All right. There are 4 in positions right now. It's in the positions, right? Now let's take a look about how this robot make the entry. Let's go to the chart and okay, CCL for example. All right. Now, can you guys look at the point of entry, right? So it bought here, and it projects to climb higher, something like that, all right? Okay, what about like PXD, for example? Same thing. So it's the bottom, and we would like to catch the opportunity here, right? And this robot bought at this level, and it's projecting up, right? Now, one of the positions, I think in the unrealized loss for Intel, take a look. So, you know, like, according to the stats, this is going to be a good entry, I would say. But remember, in the market itself, there is always what we call a noise. So probably it's dropped for a while, but it holds still because according to the calculations, it has a potential to go up. I mean, maybe next week, all right? So it holds temporarily. Now, in this platform, right, you can take a look the historical. Okay, I would say that some are making money, some are in negative, yeah? Now, you look at the page 1, all right? Now, let me show you MRO here, all right? MRO. You see? Trust me that there will be no human. You know, like the first drop, second drop, so probably, well, you kind of scared, right? And, you know, you probably would like to sell off here. But this is where the robot makes the entry at this point. Now, let me show you that. And it sell off actually last night here. It sell here, right? So it bought here, it sell there. Now, probably if you ask about whether the robot using fundamental analysis or using technical analysis, it's very, very obvious it's not fundamental. Okay, no, I believe that no fundamental in today's markets, right? And when we're talking about TA, we know technical analysis, there's a lack or pretty much like confirmations. If you're using MACD, ADX, or whatever it is, right? It uses the confirmations. But the way how it treats the market, you can see it very clear. It takes no confirmations. And at that spot, okay, if I'm using MACD, for example, you probably will make the entry around this area, right? If you're using MACD. Every technical analysis, or most of them, are using confirmations. But this itself uses no confirmations. This is what we define as the pattern recognitions, or we use data to make the entry. Very different. Now take a look more. So there are losses, there are winnings. All right, I just give you a glimpse so you have a feel. All right.
These all the positions that the robot is in, right?
Yes, the position that the robot closed, right?
Close.
Yeah, so maybe I will take this HRB. Okay, another one, HRB. It's not HRB, yeah? It's HRB, right? Okay. I think over here, right? Yeah, same thing. It tried to buy at the bottom, sell high. So do you see that when you use a pattern recognition, right, when you use the data, that's going to be very different experience comparing fundamental technical analysis or using a data-driven investing model, which you don't require kind of like confirmations because it's taking stats to confirm your trade. So you know, like when you're using technical analysis that you need a confirmation first, we don't need that because this has been statistically computed before that and make execution at a time, right? Now, another one that I would like to show you, just 1 second, yeah, is this one, all right? Now, this is Trident performance from 2018 to 2021, and take a look. The return is about 30% in the last, I think, 3 years. So that's about like 10%, right? Now, before I'm introducing you Trident X, I just tell you about the Trident first. Trident is the brother of Trident X, all right? So now let me show you K. Take a look at this equity curve, all right? This is Trident, the blue color. The green color is S&P 500 or the market or the index. The dark green is a bond. It's a bond index. Do you see that? It's kind of like very close correlation with the bond, if you can see that. But the performance is just like in equity. It's very aggressive. But when there's a drawdown, this is when the market drops like 35%, your robot still performing positive. In 2018, China-US trade war, when it dropped but negative 20%, it's still making positive performance. So this is COVID. This is trade war. And today we will look more about how it will fight against the Ukraine versus Russian war, all right? I just want you to take note this number for a while. Okay. Can you see drawdown? What drawdown means is that, you know, for investors, what we are scared of is that when we invest at the wrong time, means that we allocate our funds at the top, and then due to some uncertainties happen, the portfolio drop, right? So the max drawdown in the last 3 years for the market is about 20%. This is like monthly drawdown. For Trident is 2.8. So that tells you if I'm investing like 100,000, my drop only 2,800. Despite the COVID, despite the despite the China-US trade war, it's only $2,000 drop if you invested 100,000. That's what simply tells you, right? Now, take a look at this one, the Sortino ratio, 5, compared to the market is 0.79. Now, I will take note this one, all right? Sortino is 5.11. And I explained to you Why? If you are looking for the strategy, this is an important matrix that you want to look at. Okay, the rest is kind of like, you know, the drawdown, standard deviations, and 1.52. The downside that you want to monitor more is 0.51. Well, this is almost like no drawdown, right? Okay, so this is the real portfolio for Trident, all right? So, my question is, does Trident works for everyone? What do you think, guys? Yes? Okay, maybe can you tell me why it doesn't work for everyone? It's performing 10% during the war, the trade war. It's performing positive during the COVID, performing positive. Why doesn't it work for everyone? Right. The right word is expectations. That is the reason why at the very beginning, right, I will set the right expectation first before we start to invest or trade. Now, take a look here. This is a real-life WhatsApp I received, right? At the time, performing at 10%. According to him, 10% is not good enough. I can get 10% doing my own trading. So I'm asking about what is your return like of minimum 15%. Now, can anyone tell me why this statement is not rational? And anyone can answer this, right, will get the $10 Starbucks cards. Can anyone tell me why it is not rational? Mm-hmm. Precisely. Yes. Right. Guys, by the way, inside there's a $10 credit. Don't throw away, okay? Just grab a frappuccino later, all right? You write in it. But before I come to that part, right, there's a things that you want to consider, okay? And I will like to put your position in our shoe. Let's say if you are a data scientist, all right? And then you are employed by iPhone and you are working on the face recognitions. Now, what is your objective as a scientist, right? And your objective is to create face recognitions. What is your objective? As long your phone can unlock when looking at your face, that's your objective, right? Then it's successful. Now, you are employed by Elon Musk, creating Tesla. What is your objective? The car reaches destinations safely. Do you care about at what speed it travels? No, right? Safety is more important, right? Now, when you create an AI to help people to invest the money, what is your objective? Safety?
Minimize losses.
Minimize losses.
Drawdown.
Drawdown. Sorry? Preservation of funds. Do you care about the returns? Yes. Okay. In short, it's that to make money, right? But here's the challenge. When we talk about make money, all right, there are ways, many ways to make money. Okay? Now I start to introduce you looking by the equity curve, all right? It can be like this. It can be like this, right? Or it can be like this. Three of them, 1, 2, 3, without any arguments, it's a money-making strategy as long as the gradient is positive. But this comes with preference. A prefers this, B prefers this, C prefers that. To B, let's say without sufficient knowledge, they think this doesn't work. For them, probably this doesn't work. To C, who choose this one, probably to them, this doesn't work, this doesn't work. Therefore, investment has a lot or highly correlated with your preference. Now, to give you a very clear example, right? Let me ask you these questions. Have two strategies here, strategy A and B. Strategy A giving you 30%, strategy B giving you 10%. At one glance, with this information, which strategy you choose to manage your fund? A? 30%, right? Depends. Wow. Smart. What about you?
Go what's the risk?
All right. Risk? Okay. Now, I give you one more information here. The risk is 15, the risk is 1. Which one? B? All right.
No difference.
There's no difference.
Risk reward is
Huh?
risk reward is 1 to 10.
1 to 10, yeah?
The other one is 1 to 2.
All right, all right. So, not confused, yeah? Some of you from A to B, B to A, yeah? Okay. Let me ask, who choose A? You choose A. Who choose B? You choose B, yeah? You choose what? B? B, yeah? All right. Now, for those choosing B, if I give you $1 million, you choose B, right? To manage money, right? But if I give you $1,000, do you change your preference? Or not? Or still B?
It may be A.
Maybe A,
because
right?
At a small amount, we really need to build into a big account in order to.
Right. So with a smaller capital, you are willing to absorb more risk. You can tolerate more risk.
Very rational, but
Looking for returns, right?
achieve that.
Yes. What about you? Same?
I think it depends on your age. Like young, you want to take more risk. Like the retiree, you say,
Fair enough, fair enough. But let me ask you one question, right? Okay, what about if you are managing $100? Which strategy you choose? Age seems not related anymore, eh? All right. And those choosing A, what about if I give you $1 million? Will you stick to A or to B? Still A. If it's $100 million? Remember, when you have $100 million, 15% drop, your investors will call you every night. Okay? So that's the challenge. That's the difficulties. When you build an AI, this is our challenge. We have just one robot to satisfy thousands of people with different preference. Right?
So you have to customize your
So why
robot.
don't you do 2 different robots with 2 different risk profiles?
So
I think tomorrow you can join us, then you understand more challenges. All right? Yeah. Now, but here's the thing, right? For every $10, the risk is 1. That's what you know, right? So if I take this scenario over here, right? Now, let's say you have one shop, all right? My shop is producing 10%, the cost is 1%. And if I don't think it's enough, what should I do? Open 2 shops. My return is higher, my cost is 2%. If I think it's not enough, what should I do? Then open more. This is how you are going to manage your own risk. Therefore, when we talk about artificial intelligence, it's not simply the reward, but it's talking about the return over the risk. That's the reason why. Now let me convince you with this perspective. You know, initially, when the market has been performing about 16%, right, in 2020, and our Trident has been performing about 8%. You guys answered, market is better, right? But one thing you forget, investment is about managing risk and return. Now, the risk here is about 1%. The risk here is 35, or to make it simple, 30%. If I can take this risk, I can stomach this risk 30%, what should I do? I leverage 30 times. My risk becoming 30, my returns becoming 240%. So at one glance, you should not compare the solutions and the S&P 500 because it's not comparing apple to apple. By normalize your risk, then you are comparing apple to apple. You got me so far?
So the 1% is the actual figure in
Yes.
guidance.
As you look at the performance, live performance, it's just 1%, right? So, okay, you know, I would say, putting this way, hey, Rain, you know, like, how can we get leverage of 30? Well, maybe we borrow from Alung. Just kidding, yeah, I never advise you to take from Alung, all right? But I would say that if we have a way, all right, we have a way to get leverage, 30, for example, borrow, for example, or whatever it is, right? Then you get this return, 240. Does it change your view? All right? That's the reason why Sortino is very important. Okay? In the simple definition, it is measuring your rewards over your deviation. Right? Now, Sharpe ratio or Sortino ratio. Like Sharpe ratio, higher Sortino ratio result is better. When looking at two similar investments, a rational, let me highlight this. A rational investors would prefer the one with higher Sortino ratio because it means the investment is earning more returns per unit of the bet risk that it takes on. So if you are rational as investors, you will choose the one with the highest Sortino. When the market was about, I think, 0.69, try then it's 5.11, right? So if you're rational, which one you choose? Trident, right? So do you see that how it changes your perspective? Initially, you think a market is better because the return about 16%. Apparently, when you drill down more, as a professional, you're not looking at the returns. You're looking at the risk, actually. Then you look at your return. That's the way how to evaluate it, right? But the challenge, you know, when we tell to our community, they just say, yes, yes, but they never leverage, all right? So this is what we do. We understand that, I mean, like some retail investors, right, they can take more risk, all right? So understanding from their feedback, right, we develop a technology that can help the portfolio or the strategy to boost up their absolute returns. And that's the reason why in 2021, we developed Trident X. And please take a look what is this Robo 2.0.
Downloading 3, 2, 1. Loading complete.
Now you understand, right? What is the difference between Trident and Tri-X? Just plug the robot with the wire, done. That's it. All right?
So, wait.
Yes.
What is the return for Trident?
It's more. It's more. But before I come to the returns, right, there are a couple of things that I would like to share with you. By the way, the CAGR is about 19%. All right? Now, the beauty, when we actually developed this robot, right, we discovered one thing. With this technology, the robot apparently can adapt to dynamic market better. All right? Now, in order for us to understand this, right, let's do a little exercise here, okay? Now, let's say I have a coin, all right, a coin A, and coin A has 70% hedge bias, and coin B has 60% hedge bias. Now, if your objective to win, right, which coin that you choose, A or B? B? You sure, B? One is A, right? A, right? Okay. Now, I changed the equations. If you choose coin A, I only allow you to toss it 100 times. If you choose coin B, I allow you to toss it 10,000 times. B. All right, whoever choose A or B right now, if I give you a capital $10,000, how much you place for its toss? Is 2,000 or 100? Confused, yeah? 3 variables, yeah? All right. Now, I just do a bit exercise, right, before I go through together with you, so you understand about what is this Robo 2.0 technology is all about, all right? Now, I have this, all right? Please do not be intimidated. It's not as complicated as what you see. Now, just focus your eyes around this area, all right? I'm trying to toss it for 100 times, all right? And then this is 70%, right? 70% winning rate. Now, if I win, I make $2,000. If I lose $2,000, all right? Now, take a look. If I run these simulations, now, there is a chance to bankrupt 1.53%. So despite you have a 70% winning rate, right, you have a chance to bankrupt as well, 1.53. But how I reduce that risk? How I reduce that, right? And right now, I only have 60% winning rate, all right? What I do is just simply put my trade size of $100. It means that if I win, I will make $100. If I lose $100, all right? And then my winning rate is smaller, 0.6%. Now, let me run these simulations for you. Do you see this one? My chance being bankrupt is 0. So what has happened here? What I can tell you, there is a relationship between your winning rate, your trade size, and the behavior of the strategy, right, that can help you to reduce your risk, all right? Now, what you just have experienced, all right, in the mathematical terms, we define it as the law of the large number, all right? But today is a Saturday morning, so I do not want to confuse you so much with this kind of theory, all right? But one thing that I would like to bring your attention to, look at this, all right? This tells you that simply, okay, the more sample size that you gather, the less deviation or the less risk. Until if you put n, the number of trade size is close to infinity, then your risk is 0. So when we're talking about this investment, for example, trading methodology, just about 30%. But the key secret is about how you manage the money, actually. The portfolio allocation, the money management, that is the most important part here. All right? So this is an illustration to understand about this law of large number better. All right, so this is deviation, this is noise, this is your expectations. So the larger the number, right, it's going to be closer to your expectations. So when you have something like, I expect this outcome, all right? In order for you to reduce the risk, just play with more sample size, all right? Don't ask me why. It's just by nature, the behavior, all right? So what this try-X does, by the way, when we're talking about try-X, right? Try-X, the winning rate is about 60%. So the winning rate dropped to 60%, right? Now, what is that? What it did, right? You know, when we talk about Trident, the winning rate is 68 because it simply looking for a strong pattern. So the winning rate is going to be high. But in the market, strong pattern is kind of rare. It's going to be gem, right? So what try-X try to do is that looking for weakest pattern as well. But we know that a lot of weak patterns in the markets. That's why it's fine, as long you can adopt and apply this law of the last number. So as a result, when you scrutinize more into the trade distributions, this is Trident, it's fat, like this, and this is try-X. So your expected return of a single trade for Trident is going to be here, about 3.5, I think 3.5. And for try-X, it's going to be less actually, about 1.9 is here. This is your expectations, a return over a single trade, right? Just like this. But apparently, try-X has been generating higher return because this is to simply illustrate. Let's say Trident have 3.4, but you only have 4 trades. Therefore, your return is about 14%. Try-X, despite giving you a lower return, but because more trades, so about 10, so your return is about 19% CAGR. You got me so far? Now, just now you did ask me about how is try-X been performing, and how it's been experiencing during this trade war. I would like to show you the real account, all right? Not from me, from one of our community, all right? So you can see yourself about how these solutions is performing year to date. And with that, I would like to invite Melvin. All right, before that, let me ask Melvin. Melvin, are you working for Algo Merchants?
No, I'm not working for Algo Merchants.
You sure?
Yeah, you always check.
Sorry.
No, it's okay. I think I can speak. Yeah.
Oh, all right. Maybe I'm pretty here.
Yeah. I'm not the staff of Algo Merchants. No, I buy them because they make money. Really. So I'm just one of the participants like you all came 1.5 years ago. So I'm already in this program for 1.5 years. So Rain said whether I can share. Of course I can share. Nothing secret, just a small account. Before I sign on, just try out with the robot and then just.
So Melvin, I just want to understand, right? When you are using this try-X, we know that in 2020 market is very turbulent, market is very choppy, right?
Right.
And first, how do you experience it? Whether that do you like disturb the robots or you let it run, and how the robot treats behavior that you observe so far? I mean, if you didn't observe, yeah, then how's the behavior so far? Yeah.
Okay, for the past 1.5 years, for the first 1 year, I really never touched the robot. Put the money and let it run. In fact, last year, 1 whole year, I have a return about close to 10% last year. Then lately, I try to manage it myself, meaning that the one thing good about robot is that they give you some knots, you know, you can turn here and there. So as a trader, you want to experiment. So you start to play with your risk, you start to play with your leverage, you start to play with your capital. It gives you that freedom that you are not totally out of control. So by doing that, you learn something. You learn something. you somehow you sometimes you see as a trader, sometimes you question the robot. Even you trade yourself, you also question how come my system sometimes works, sometimes doesn't work. But the Sortino will not give you a wrong answer. Eventually, you are in or out of the market, it still gives you a positive result. That's what we want to look for. You have winning trade, you have losing trade, almost like every day, every week. But at the end, your account should positive.
So the account can be customized.
Okay, we do have a default settings, right? If you want to follow the model portfolio, so called. But some of the traders, perhaps you want to play with even more with the leverage. But leverage means like higher risk a bit, but higher return at the same time. Then you can toggle that parameters as well. But you can just let it run to really follow its model portfolio. Yeah.
Can I just check? Sure. But you mentioned you didn't monitor the first year, like just let it run. Right?
Yes.
I'm just curious. The drawdown is very good, but the floating losses, was there any point that it was huge, or it was always very controlled?
There is a risk tolerance that you can set. Okay, because based on your capital, then they have the allocated invested amount. So the principle is to preserve capital. You have to be in the game all the time. Because of not one loss and then you wipe out. You have no money to trade. So when you put in a cash account, of course you have limited capital. Then the robot will money manage for you. How many trades you can take? What are the risks that you have defined, default, and then if the risk has been the losses has been reached, then you will be out of the trade.
Yeah. The reason why I asked is because I think what they do is they buy when it's falling, maybe based on those statistical result that they expect as well, right? So, but there are some cases where they fall, and in the downtrend they may suddenly get also some positions I think they may lose. So I'm just curious how much is the floating losses before it closes, because they don't close. There's no stop loss much. By the time you decide to, it would be very far down or whatever. So.
Okay, I think I also, in fact, I think Ray can answer that. But my personal experience, it will not cut at the lowest point. Even you as a trader, you know that it will not cut at the lowest point. You see, for us, we want to cut at the shortest point. But somehow, the strategy is that it will cut at the bounce. Is it? Okay. So your losses is again smaller and it's not cut at the lowest point. Right. Because there is a time frame for the robot to execute trade.
By the way, to answer the question, okay. The robot actually pretty much doing for the exit strategy rather than cut loss, right? Because through our observations, when we do backtest as well, when we do a static cut loss, right, the result is not optimal. It could be from your risk, it could be from your return, right? So as long that you do a continuously in the markets, stop loss actually does not really affect your portfolio. But it is good for the field, for human, but cut loss is only for human. Robot does not work that way because it's always looking at the expected value. It means that if I do still have a chance to rebound, and if that chance giving me higher return, then I will keep. If there's no hope, then I will sell it. So it always look for exit strategy rather than stop loss, right? And understanding that when in a noisy market, these particular stocks will be rebound like from positive to negative, negative to positive, right? So we let it run organically. Yeah. So the moment actually we do a cut loss, it will be skewed at one side, and that will not be optimal. That's the reason behind, right? And how many of you would like to look at Melvin's portfolio? Sorry, Melvin, they want it. Yeah, please. So this is gonna be your, please.
Is he using are you using Trident X or Trident or
Trident X?
Tri-X.
Yeah.
Yes.
So wait. Yeah. And then when you do it your own, first year you make money, about 10%, and then after that you try to experiment. Do you make more money or lesser money?
This is what he's trying to display. Okay, now, guys, take a look. Please. Yeah.
You see, when we are human, that's why you say you answer fear. when you see, oh, drop, you somehow go and cut loss. So you cut it at the bottom. But the robot wait for the price to rebound. It probably even, recover all the losses and take profit. So the human behavior in trading sometimes interfere. So when the first year I tried, I just let the robot do. I never even touch it at all. So it actually make a good performance.
So it was better, like, first year was better than current.
Current, of course, as you know, the market have behaved differently lately. Yeah, especially last night, if you had watched, after 10 o'clock, the thing just 9:30 is still positive. After 10, the thing just go all the way down. So if you are watching the market, you know how that thing is going to behave. So that is trading lah. So I mean, if you're long enough in the market, you will able to handle all this, which I think I'm nobody to advise. Okay.
So by the way, guys, what Melvin is trying to do is connecting to interactive brokers. So it's not algo merchants yet, it's interactive brokers. So the fund is actually transferred to the brokers. It's not our brokers, it's Melvin's own personal brokers. So the robot cannot transfer your fund out. There's no way, right? So you pretty much have a very good control over your own portfolio, right? So what happens is that the moment you have this robot, right, then you just do need to set up, the robot's going to be linked to your account, all right? And your user experience, right, you engage more in our platform, all right? So these brokers, right, interactive brokers, to facilitate you with your dealings, your transactions, right? And for us, we do not take any commissions for you or charge you fee. We don't do that, all right? Now, maybe it can help you performance and reports, yeah?
Where?
Yeah.
Performance and report. Okay.
Yeah. I think Melvin started somewhere last year, real much, yeah?
Go to portfolio?
Yes, portfolio analyst.
Okay.
So probably if you can first like custom return, looking at the last year.
Custom.
Yeah. And then I think you started 21, yeah? I think you can click this. Right, and 2021. Right. I think you started February.
Yeah.
The date is 10.
Okay. Just put this one.
Okay. Agak-agak lah ya.
Okay.
Oh, sorry. The session has expired. Maybe it's expired. Right. Apparently that counts.
Because maintenance, I think.
Oh,
Schedule.
maintenance, yeah.
Yeah.
All right. Or maybe we just go to yesterday.
You can try it one more time. Usually like
Oh, okay. One more time, yeah. What should I do?
Just refresh. Yeah. The account is very nervous. Yeah.
So when we can only trade through IB, is it?
Currently, we are connected with IB in terms of the this technology, with the API. All right, but we will have more options later in the future. Yeah, that's why you need to stay here. Give me 1 second. That's the reason why, if all of us here are having the robots, right? The robot, whatever the robot takes for you, for me, for you, it's going to be the same. That's the reason why our result is very transparent, because like the robot's going to be doing for everyone. The robot is very fair, all right?
So Ray, you're saying that we will all have the same portfolio?
Yes, more or less. Yeah. So let's say if we go back to 2021, February, maybe with 11, because it's not.
Yeah.
Yeah.
Try a later date. Yeah.
Right. And then we tried 21 December. Right. And then scroll down a bit. Scroll down.
Oh, okay.
Yeah.
Yeah.
Yeah. Okay. Scroll down too much. Go. Right. Yeah. Okay, if you want to look your portfolio, right, it has to be human, yeah? This, we...
So which are the markets that the robot trades in?
US market.
Only the US market?
Blue chip US markets. The reason because like we need liquidity, because remember this robot after all is playing with the statistics.
December
And
2001.
to enable the statistic, right?
This one,
To
yeah.
mix it,
Okay.
you need a number.
Okay.
You need liquidity. That's the reason.
Okay.
Why?
So,
Yeah.
Okay.
Good.
Right. So this is gonna be the performance.
Yeah, return is 10.
Maybe let me circle, yeah.
okay. It's about 10.54.
All right. So this happens. I think this is 21.
Yeah, 1 year.
Just 1 year, yeah?
Yeah.
1 year. Coffee is 2020, right? 2020, yeah. Yeah, so this is 21. It's about 10. All right. Now take a look. Might need to.
Yeah, yeah.
Okay. I go with year to date.
It's -2. Right? Now, first I will ask Melvin, to get this -2 right, do you like have a hard time? No, yeah?
One point I want to mention is, in fact, profit has been taken out.
Oh, okay. Okay.
So you see this, the 2K is happening.
Right.
So the actual losses is less.
So I think that he bought iPhone, yeah, iPhone.
Well, I watch.
Oh, that's cool. That's the reason why the performance dropped -2, all right? Okay, the model portfolio is about -2%, all right? Now, last night, the market negative dropped for 3%. If you go like
7 days, it's plus 0.727.
Do you see that it is not correlated with the markets? So this is how to explain first when you mention the market drop, then everything gonna be dropped, right? Apparently it doesn't work that way. If you use AI with the correct technique, with the correct money management, that should be fine. And that is what we call alpha. Alpha is very different from beta. We do not follow the markets. Regardless, market tomorrow crash, plunge, we don't care. That's alpha. So far so good? Right. And any more questions for Melvin? If not, we give a round of applause. Thank you so much, Melvin.
So I lock out, yeah?
Yeah.
All right. Now, one thing that I would like to highlight to you, all right?
Earlier on, we said that we want to be a Warren Buffett, right?
Do you know how much Warren Buffett has been performing year to date? -4.
Am I right to say Melvin does better than Warren Buffett? Yes?
And Melvin does better than the market.
Right? What he does? Sleep, eat, and play golf, right? That is how technology will help retail investors to make better money from the stock markets. Tri-X Ordinary is about 2.80, about there. Now, once we are happy with the solutions, right? One thing that a lot of investors or traders, they have a very wrong way to manage the money. Now, remember that when you are using the solution itself, right? Two ways on how you want to do with the solutions. Once you want to manage your portfolio, or you want to grow portfolio, you have to be very clear. What's your objective? To manage the portfolio, the wealth that you have, like a McDonald's, just receiving dividends, or you want to grow it, all right? When you have a right? Then you want to grow this business, all right? So when you are managing your portfolio, one thing very important here, you would like to factor in your compounding interest as a power to grow, all right? Now, let me show you this equation here, all right? You know, a lot of people think, hey, Rain, you know, when you are having a robot, right? So I have a holy grail solutions, and I just put one side, the robot making money for me. Is that true? Well, I would say that it is partially true, but it's not 100% true. And let me explain you why. Now, remember, I have the calculator with me, assuming that if I have, okay, let's say $500,000, all right? I have $500,000, and then I just have 5 years, you know, and then my estimate interest rate about 19, all right? And then I compound it annually. So this is if I just want to manage my wealth. Okay, in 5 years' time, it grew about 1.2 millions. Now, the exponential power is actually comes from here. If you can extend another 5 years' time, then it grows exponentially. Do you see that? Now becoming $3 million. This is if you want to manage your wealth. Now, what about if I would like to grow my wealth? Assuming that I started with $15,000, all right? Now, I just have monthly contributions, maybe $1,000 every month. We do it, let's say, for 5 years, okay? And compounded going to be on monthly basis. Okay, for the first 5 years, this is the result that I get, 1, 3, 7. So my capital is about 75,000, but my return is almost 100%, about 140,000. Now, when you put it 10 years, right? Remember, our objective is to grow. Then here's the result. Do you see that you are earning 300%? So from 135, you make $500,000. So there are 3 variables that always you want to take note. It's going to be, first, your principal, all right? And then top up. This going to be very beneficial for those who would like to grow the wealth, and then time and interest, and then you achieve your goal, right? Tri-X is only helps human retail investors to solve in terms of your interest, 19%. This itself will never bring you to the goal, because there are 3 variables that you need to take note. If you want to preserve, you don't care about the top up or the time. But if you want to grow, for example, principal, all right, you need another 2 variables, the top up and the time. So if the interest is managed by the robot, who will manage these 3 variables? Yes, human. So human and robot have to collaborate together to bring your goal come true. Does it make sense? Despite I have a secret better than Warren Buffett, but still need your help. That is the analogy that I have. Right? Okay. So far, so good, yeah? Now, before I continue, right, and tell you more about how to engage the Tri-X to manage your portfolio, I do have a quiz, all right?
And this quiz is going to be very exciting. If you win, you will get $10 Starbucks cards. And for that, let's welcome Darmawan.
Thank you, bro.
Tell them about the rules, okay?
Yep. Okay. So far, so good. Oh, sure. It's good. I don't see any smokes coming out from your head. So far, so good. Yeah. Okay. So before we continue, we have a quiz, right? So don't worry, it won't crack your brain like crazy. You just need to have a good sense. So we have 5 questions. So I'll go through the questions one by one, and then if you know the answer, raise your hand, and then I'll choose you to answer. So if you got it right, then you get the voucher. So this is like first come, first serve basis, provided that you're right. Okay, so let's start with the first question. I'll read the questions. In 2019, strategy A with Sortino ratio of 0.5 made 16% return. On the same year, strategy B with Sortino ratio of 2.5 made 5% return. Which strategy is better? A, definitely strategy A because last year it generates higher return. B, strategy B is better because it's generating more return per unit of the given risk and has greater chance of avoiding large losses. C, both are equally good because A has higher return than B and B has higher Sortino than A. D, there is not enough information. Yes? B for ball or D for duck? Bank. B, all right. Yes, you're right. Congratulations. Yeah, yes. Very good. That means you're paying attention. So indeed, we have to look at the Sortino ratio or the rewards over the risk ratio. Next question. How do we know that TriX has a predictive value and a good chance to perform well in the market? A, because TriX was created and designed by smart data scientists and quants. B, TriX has gone through validation tests in which the outcome of the test is unbiased and it is expected to perform similarly in real-life market scenario. C, market is random, so we don't have the edge. D, because TriX follows market return as economic expanding, TriX will perform good in the market. Yes, sir. B, yes, you're right. Yeah. So this is something that Rain actually shared earlier on. So when we create our robot, we don't just create the algorithm and launch it as a robot as is. We have to do a lot of validation tests. We do a lot of back testing just to make sure, given the different kind of market conditions, it is performing as what we expected it to be. Right? Okay, so next question. Oh, sorry. Okay, next question. Which of the following solutions leverage on AI and data technology? Endow Us, Stashaway, Algo Merchant Trident X, EA, and T5. Yes, sir?
C.
C, Algo Merchant. Yes. Very good, yep. See, I told you it's easy, right? Okay, so next question. Which of the following fund or solution is not impacted by Russian versus Ukraine war? A, Phillip Capital Managed Account. B, Quant Edge. This is Singapore's most profitable hedge fund. C, Goldman Sachs US Equity Fund. D, Algo Merchant Trident X.
D.
D. Yes, you're right. Congratulations. Yeah. Yeah, it's no brainer. It's the obvious answer. So, which is the best performing portfolio year to date? Again, Warren Buffett, Berkshire, Class A, Algo Merchant Tri-X, S&P ETF. Raise your hand first. Okay, so maybe we give a chance to the guy in hand. Sorry? B. Yes, Algo Merchant Trident X. Right. Okay, thank you very much. So I'll... Yeah. Because we want to make sure everyone participates. Yeah.
Right, so hope that you have a good morning exercise, all right? And as we play, we learn at the same time. That's going to be fun, right? All right, so as a traders, right, we need to understand about how these solutions will benefit us, right? Well, before I go to that, right, I would like to ask a question, maybe for you, Jacob, right? if I entrust my money to you, all right, please help me to manage it for a year. How much you're going to charge?
1% and then with the 20%.
Is there any fix? Any fix? No? Yes? Any management fee?
1% of AUM.
1% now.
1% of performance.
All right.
5%.
All right. Very, very generous of you. Right. What about you, Doreen? If Shireen, if I entrust you my money, right, and you want to manage it for a year, how much you will charge me? 1%, yeah? What about you? Okay, thank you so much. Later, we will discuss it later, okay? What about you?
Zero management fee, 2% on the performance.
All right. Now, for those giving me free, right, it's very interesting. I would like to show you some numbers here, right? Do you know that when you do trading, right, when you do trading, there's a cost actually, all right? And here is the cost, all right? So, okay, assuming that out there, if you employ a money manager, right, so this is going to be the rate, all right, the 160,000 per annum. This is usually ranging about 160 to 400,000, 300,000 around there. Now, if you subscribe to professional tools like a Bloomberg, Reuters, because we do not want to be outdated, then this is going to be the fee for you. It's going to be about 36K for a year. You definitely need a charting platform, right? And it comes to the cost, like maybe 4,200 to 6,000 per annum. I'm taking from this white chart. Now, if you have like a trading tools or scanner, that's roughly ranges around $250 to $900 per annum. All right. Now, if you need a foundation, you learn first, then you will manage my money. Then you attend a trading course. You need to pay for $2,000 to $7,000, right? You need a laptop to help me. Need, right? And that's going to be about 1,200 to 2,600. Do you need aircon or electricity? Those giving me free one, right? I will thank you so much, you know. But do you know that actually when you trade for me, right, you need electricity because in the evening, sometimes humid, right, in Singapore. So you need the aircon. And by the way, right, if you do run aircon 8 hours for a year before inflation, all right, this is going to be 2,400. Today, if we put it like double, it's going to be 4,800, right? And you need coffee? Yes, right? If we're talking about not Starbucks coffee, we talk about Yakunai's coffee in a year before inflation. Today, I think about 2.9. Before that, 2.6. It's going to be about 936 per year. All right, so this is the coffee list, okay? And then you also need to spend the health costs. For a year, it's going to be, I believe, priceless, right? And also the opportunity cost, because you can watch movie, you can have a better sleep in these last 10 years. So the question again for you, are you sure you're going to charge me for free? Thank you. We will discuss it later on, okay? All right, but I just would like to emphasize here, as an investors, right, there's a consideration also you need to know. When you do trading, right, there is a cost, all right? But one thing, when you use these solutions that you can skip through, is that all the costs, all right? And even actually when you use a robot, you can gain these costs, the health costs back, and the opportunity costs for you. And one thing that you can never skip. You know what cost is that? A coffee cost. Okay? Because the robot has to work in the middle of the night for you. Make sense? Make sense, yeah? Right. So am I right to say, if we are a smarter traders, right, rather than we drink coffee and we trading in the middle of the night, isn't it better if we just give a coffee for the robots to work for us? So we can have a sleep and we can stay healthy. Make sense? Makes sense, yeah? Okay. So before I tell you more about how you really gain the benefits from these full suite solutions, all right, I just want you to hear the experience from one of our community members. And here we go.
Hi, my name is Manoj. I used to work on the trading desk dealing in global equities. Like many others, I was on the quest to find out the holy grail of investing solution. A couple of years ago, I moved on to become a full-time investor. Because I found a better way to manage my time and my wealth. Many have asked me, how do you do that given that the market is so turbulent, and especially with COVID-19, we saw a real scary situation. In March 2020, the markets plunged by about 30%. I tell you what, come with me. I'm going to log on live to my account and you can see for yourself the performance of my portfolio. As you all know, the markets are currently not doing very well. The markets are trading in negative territory. Come, I'm logged on live to my account. Let me show you how my portfolio is doing. And you can compare it to the current market. We are now logged on live, and this is my portfolio analyst to show you the year-to-date performance. I click on year-to-date, and if you can see, year-to-date, we're doing at about 10%. Please be assured that this is no fluke. If you look at the historical trades, you can see a total of about 25 to 30 stocks that were bought and sold to achieve the 10%. I'm not going to teach you how I professionally manage my portfolio, but I'm going to share with you a secret. I can achieve 10% year-to-date return because I use a technology. I use what is called a quantitative AI-developed robot named Trident. To employ Trident, all I have to do is switch on the button and he works right away for you. Trading for you, provide analysis and report anytime I want. In the beginning, I run Trident with a given set of parameters to work on. But today, as a professional, I tell the robot to work on my setting according to my preference in order to achieve the performance I want. No question asked, Trident gets the job done for me. In my opinion, Trident is the best portfolio manager ever. Thank you, Trident.
All right, so that is the experience that we want our community to have, right? You can become your own portfolio managers just simply using artificial intelligence and technology, all right? Now, in order for you to use the solution itself, right, there are a couple of setups that probably you want to take note, right? Now, we need a virtual machine, right? This is like a virtual desk, like, you know, like Meta, right? Meta first, okay? So the robot also need a work desk, all right? So you have a virtual machine where the robot is sitting there and work for you, all right? And then we also have the auto invest software. So this is actually to help you to replicate your, from the robot signal to your brokerage account, all right? Now, there's a setup service as well. By the way, do not be intimidated because all the setup, right, we did it from our backend, all right? So this is going to be very simple, all right? And then there's a platform training as well. We train you about how to use the platform and what are the things that you want to take note. For example, if you want to change your setup, and also we provide you with the system support. This system support, right, is actually, there's another robot to monitor your robots. So if your robot falls asleep, this robot will tell you that your robot is falling asleep. And if that doesn't work, we will call you to wake up your robot, all right? There's a robot license as well, all right? Definitely there's a license. And because it is AI, there's a market data. Because in order for the robot to be smart, it consumes a stream of data live, all right? And also there's a robot algorithm, which we think is going to be priceless. So the value, if you do Google, all right, this is going to be a range around $6,950, all right? But no worries, okay? Like what we tell you, all right? You only need to give a robot a Yakun coffee a day, and the robot will work for you. All right. So with that, we have this offer, $1,288 a year, and this will include everything, the solutions. So you just need to connect the broker to the solutions, and it will work automatically for you for 365 days. But today, because we have special offer, all right, because our dear friend there having a big birthday today, celebrations, all right. So we would like to further offer you, all right, only with $988, all right. We know that market last night has dropped about 3%, and this itself, right, will create volatility in the markets. And the more volatility, the robot will be more active and to profit from this market inefficiencies. So for those of you who are ready, all right, to employ TriX to engage in your fund management, all right, you can approach our desk, corner desk over there, and our teammate will be able to assist you and tell you about how is the onboarding process, right? So it's going to be very simple. Once you're ready, then Monday we will start, all right? So that's all I have, actually. And to have this special offer today, you only need a coupon code, TriX2022, right? But you can just simply approach our team over there at the corner desk, and they will be able to assist you with that. I really thank you so much. And behind there, we have lunch. Please feel free to grab your lunch. And if you do have questions, I'm going to be here to address all the questions that you have. Right.
I see that you have a few robots down there. So
try the next.
No, just now when you were demonstrating, you clicked try X. Then there was some.
Right. We have a library of robots, but no, we do not put them into a commercial. No, because we are working together with some institutions, some like family offices, some fund management as well. So we customize robot actually. But those robots is based on according to their preference as well. Yeah, but this is what we think, in our opinion, is kind of like, in terms of the tolerance, good enough. That's what we think for retail investors. And the return is, I think, handsomely rewarded. Yeah, but the other robots, they have different risk drawdown and performance as well. So we do not open up. And by the way, they are proprietary as well. So we can't open up to commercialize them as well. Yeah, and therefore, we have TriX here, right? No more. Yeah. So, okay. By the way, guys, I really thank you so much. Please enjoy your lunch, and I'm going to be here to assist you as well. If you want to proceed, you can onboard from the corner desk, and our team will assist you with that. I really thank you so much.